The US dollar is mostly higher, but marginally versus the three major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. Focus will continue to be on the tariffs and any news out of Washington from the new Trump administration. Yesterday we saw both Canada and Mexico avert tariffs rising by 25% by agreeing to employ troops and protection to the borders to stem the flow of fentanyl and immigrants into the U.S. So that gave them 30 days at least. China, though, tariffs seem to be the 10% tariffs applied to their goods seem to be going into effect. Trump is expected to speak with Xi, so there could be some headlines from that call with him today. So be aware. Let's go through the technicals now that are driving these three major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar. Starting off with the euro versus US dollar, the price action was volatile, up and down and back up again. The move to the upside was able, early in the session, was able to get above this swing area. The swing area is defined by a number of different swing lows through here. That became a resistance through here, and then support again through here, and resistance. You can see how we flow back and forth between finding either support or resistance against this yellow area right through here. We gapped to the downside in trading yesterday off of the weekend news, but then rebounded and was able to get above the swing area between 1.0332 and 1.0343, but it failed, and we rotated all the way back down to this area right through here. I'll put a red line across so you can see some important points along that line. You could see, it's started with these lows right here, maybe this high right here, this low right here, broke below that level. Had another level right through here where we found a resistance, and then traded above and below the level right through here before moving to the upside on the way down yesterday. We used that level as a resistance level, and then moved above it and used it as support before moving to the upside into the Asian session. In trading here today, the low price came right down to that old level right there and found support buyers. So there's something about this 102.71 level which is of interest to traders. So be aware of that. The move back to the upside got back above this swing area, but the falling 100-hour moving average is getting closer. And we found those willing sellers against that level as well as the high price from earlier in the day. So ups and downs are dominating. The 38.2% retracement of this move to the downside is also in play. Although the price has moved above it not once, not twice, but 3 different times. So there's a combination of resistance up at the top, which seems to be putting a lid on this on the euro versus US dollar, at least for the moment. If we do break above it and break above the 100-hour moving average, it open the door for further upside. Until then, play the up and down trading range. Traders can lean against this, maybe this level right here, and hope that the price rotates back to the downside. I'd earmark this level right here. I'm not sure it's that significant, but certainly the 102.72 level is a key support level for the euro versus US dollar, has been of late, so pay attention to that level. Let's take a look at the dollar versus yen. And similar to the euro versus US dollar, saw plenty of up and down price action, in this case above and below the 200-hour moving average. That's the green line in this chart. We went above it in trading yesterday as well. Failed, rotated when we fell back below it the second time right here. We did see increased momentum sharply to the downside, as of course helped by headlines. In trading here today, what we can say is that the 100-hour moving average in this swing area down through here between the 154.77 and 154.96 did do a decent job of holding support in trading here today. So pay attention to that level on the downside of this area on the downside, inclusive of the 100-hour moving average, and the 38.2% retracement of the move up from the December low to the January high goes back further right there. That's going to be a support on the top side. Although the price trades above and below the 200-hour moving average and is pretty sloppy, I'm not really paying attention to that level. That says to me that the market's really not sure of which way it wants to go. We do have lower highs of late, lower high, so on and so forth. We did have one little higher high right there, but not against that high right there. But so there's a battle going on between buyers and sellers. Maybe the buyers and sellers are really not sure of which way they want to do. But if the price is able to stay above this 200-hour moving average, it does give more of a bullish bias. I couldn't see price headed back toward this swing area, which is more of a significance back here, here. Got very messy through here with trading on last week and the last couple of weeks with all the news and inauguration, all that other stuff that goes on. So that made a bit of a mess through there. But, maybe you can, if I look at it right here, put a red box around that area right through here with the breaking low, higher, lower, higher, so on and so forth. So that would look toward the high price right here, 156.73, if we do break higher for the dollar versus yen. On the downside, break below this level right here, and it's looking toward our low prices that we saw over the last 7 or 8 trading days in that pair. Let's take a look at the sterling versus US dollar next, and like the euro versus US dollar. Volatility to the upside, to the downside, to the upside, back to the downside. All the while trading above and below the 100 and 200-hour moving averages, which suggests that some of the other currency pairs of market is unsure of which direction it wants to go. What we can say is that the high price in the early Asian session came up to the 50% retracement, found willing sellers against that level. That's how they moved down from the December high to the low price that we saw in January, back there. So that kept a lid on the upside. On the downside, the low price in trading here today stalled against the swing area down through here, which comes between the 1.2351 and 1.23759 area. And so that was a nice hold on that side of the equation of the trading range here for this pair. Also, the 38.2% retracement that moved down from December. The broken 38.2 held support. You want to see that, and it's held support. I guess going back to this day right through here. So. Well, actually, it didn't. It fell below blown trading yesterday. I lied, but we came back above it and then held support through here. So that's somewhat positive. But the battle's going on between the 38.2 and 50% retracement in the sterling versus US dollar. Be aware of that. And in between, it's just the 100 and 200-hour moving averages. The market figures out which way the next shove is going to be in this currency pair. So that's my look at the 3 major currency pairs from a technical perspective. My name is Greg Michalowski. Good fortune to trading today. Bye-bye now.